Right, it's 27 minutes past the hour of 7 o'clock and we are continuing our business breakfast segment. We want to talk a bit about Islamic banking. And to talk about Islamic banking, we have Professor Abdulazeem, and he is here to tell us a bit about how Islamic banking works and, in fact, how we might be able to benefit from this form of banking in Trinidad and Tobago. Good morning, sir. Welcome to Morning Edition.
Welcome. Thank you very much.
Thank you for being here. Islamic banking, why is it or how is it different from traditional banking?
Bismillah ar-Rahman ar-Rahim. Traditional banks deal in interest, whether in borrowing or in lending. According to the Sharia, which is the Islamic law, dealing in interest is unlawful. So Islamic banks will not deal in interest. Instead, we have in Islamic financial law 12 contracts that can be used to replace the conventional contracts. So instead, let's say, instead of giving a loan to the client, we ask the client what you need the money for. If he needs the money, let's say, to buy a car, the Islamic bank will buy the car, then will sell it to the client with a markup, of course. So here the bank is just acting as a seller, taking responsibility of the sold assets. Unlike in conventional banks where just the bank just gives the loan,
yes,
and the customer, of course, will buy the car with this loan.
So, Professor, explain to me, when the Islamic lending entity buys the car on behalf of the borrower, at what point does ownership of the car, at what point is that ownership transferred to the borrower? Is it when the borrower has completed paying the Islamic bank, or is it at the point when the Islamic bank hands over the car to the borrower?
First of all, the Islamic bank buys the car for itself first, not on behalf of the client.
Yes.
So the bank buys the car for itself, then sells it to the client and hand it over, and transfer the title directly to the client, and the client will have to pay the price over a specified period of time. This is the contract which is called murabaha. But in another financing instrument, the title will be transferred only after completion of payment.
Right.
So that contract is called lease. So the bank will be leasing, especially it's typically applicable to home financing. So the bank will buy the house, then will lease it instead of selling it to the client. If the customer has, let's say, successfully completed payment of all rentals, then the bank will transfer the title to the client.
Right. Now, is it in the same way in which traditional banking, there is the obligation on the part of the borrower to fulfill certain requirements within the loan contract?
Exactly.
In the event, under Islamic banking, in the event that the borrower is unable to fulfill his or her requirements, how then does the Islamic banking entity recover its funds from that situation?
It depends on the contract itself, on the underlying contract which is used for the financing instrument. If it's lease, then the title remains with the bank. So in case of default, the bank has the right to reclaim the asset because it's still under the ownership of the bank.
Right.
If it's murabaha, whereby this asset has already been sold to the client, of course the bank in this case cannot reclaim the asset, but the bank can impose some financial penalties on the defaulters. But when it comes to this issue, if we, according to the Sharia, which is the Islamic law, we cannot penalize financially defaulting clients. You can penalize them financially as long as you don't keep the financial penalty, because if you keep it, then effectively you are collecting interest, because interest can be at the start of the contract, when I from the very beginning make a condition that you pay me back some interest. I give you a loan with a condition that you pay me more than you have been given, or I make a condition that in case of default, and the contract here the loan could be interest free, but with the condition that you pay me back in case of default more than you have been given, then this also considered to be interest and unlawful according to the Sharia. So in the context of murabaha, if we don't financially penalize defaulters, then all clients will default on purpose. So to solve this issue, the Sharia board, and of course every Islamic bank has a Sharia board, Sharia supervisory board. It comprises Sharia scholars who have degrees in Islamic financial law as well as banking experience. Its responsibility, of course, is to make sure that the transactions are as per Sharia requirements. So according to the opinion which has been arrived at by all Sharia scholars, contemporary Sharia scholars, they say that in order to help the bank operate, we allow Islamic banks to impose some financial penalties, but we don't allow them to keep them. So they can take this financial penalties, but they have to channel it to charity. So it functions just as a deterrent, as a precaution measure in order to prevent the possibility of intentional default. But here, from a Sharia point of view, we don't penalize all defaulted customers. We have to investigate the case, because if the customer has defaulted out of insolvency, then we cannot penalize him. We can penalize only the delinquent, those who have money to repay the debt, but they don't do that. Because according to the Sharia, one of the channels of charity is the insolvent debtors. So we cannot take charity from someone who himself is entitled to charity.
Yes.
So we have to investigate the case. Procedurally, we penalize all defaulted customers, but if the client proves to the bank that his default has resulted out of insolvency, then we have to repay him back the financial penalty.
Okay. Now, in the context of traditional banks, is it possible for traditional banks to offer Islamic banking as part of their range of services?
Absolutely. Absolutely, and there have been many conventional banks with Islamic windows. They call them Islamic windows. So in these windows, they offer Sharia compliant products. There's no objection to this. What matters from the Sharia point of view is the contract itself, regardless of the contractors, be they Muslim or non-Muslim. What matters from Sharia, as all Muslims can deal with non-Muslims in selling and buying and financial transaction in general, as long as the contract is as per Sharia requirement. So, as such, Islamic conventional banks can deal with or can offer Islamic banking or Sharia compliant financial transactions to the Muslims or to the non-Muslims.
And how do these conventional or traditional banks ensure that they stick to the requirements of Islamic banking in accordance with Sharia?
They must have Sharia supervisory board as well.
So they'll have to impose or have a Sharia supervisory board.
Yes.
Okay, in order for this to be considered
Yes.
Sharia compliant.
Of course.
If I may use that word.
And the Sharia supervisory board, of course, will use the same standards, regardless of the bank being a fully fledged Islamic bank or just an Islamic window affiliated to a conventional bank.
Okay. Well, Professor Abdulazeem, it has been a pleasure. It is very important for us to talk about these different forms of financing, and Islamic banking is a key element of the entire financial structure. Thank you so much for being here.
Thank you very much. Thank you.
Okay, folks, we're going to take a very quick break, and when we come back, we're going to continue our discussion on Morning Edition. It's February 25th, 2013.